Sometimes people look at their pay stub from work and they see something called FICA tax and they wonder, well, what is this? Don't I pay income tax? And actually, FICA is distinct from income tax. It's a different tax altogether. And what FICA really stands for is the Federal Insurance Contributions Act. And it has two parts to FICA. And one part was actually established in 1933. That's the old age, survivors, and disability insurance, right? So that's, people commonly say Social Security, right? When you hear people talking about Social Security benefits, a lot of the times, sometimes they might be talking about all the funds that go to FICA, but usually they're talking about this, right? And they're thinking specifically about the benefits for retirees, and that's where we have this old age benefit or insurance here, right? So this is going to be supplemental income, or at least it was intended to be supplemental income for people who have retired. But there's also survivors benefits that are part of it that are for, like, let's say there was a deceased worker and their child would be entitled to survivors benefits, and then also for people who are disabled. In some cases, they can get Social Security benefits. But also there's a second part. So again, this first part was 1933. It was actually part of the New Deal legislation with FDR. But now there's also a second part that came about in 1965. It was signed into law, and it's called Medicare. All right? So Medicare, now we're looking at medical insurance for Americans 65 and over. 65 and over. But again, it's not just like how we look at the Social Security component normally associated with retirees, but there's actually these other groups that benefit as well. Similarly, for Medicare, it's not just for people 65 and over. For people, let's say you had some certain type of kidney failure, or you're younger than 65, but you have some kind of disability. So people with disabilities. So in any case, basically, we tend to associate Medicare with benefits for the elderly population. So FICA is withheld automatically from your check, so you don't have to kind of file a return, and people don't think about it like that. But in some cases, FICA can actually be, for a lot of employees, maybe more than what they're paying in income taxes. So it's good that you have an understanding of it. And now you would actually have to file to pay your FICA if you're self-employed, though, because the thing about FICA is, and I'll just give you a little bit more detailed breakdown with it. So you split it with your employer, right? So you're actually paying on your wages 6.2% for the old age and survivors benefit part, the Social Security part, and then the Medicare 1.45%. But your employer is paying the other half, right? So it's actually the whole FICA piece is 12.4% for that Social Security part and 2.9% for Medicare, right? So this is a total 15.3%. So this is a hefty tax here. And if you're self-employed, let's put SE. If you're self-employed, they call it the self-employment tax sometimes. Basically, you don't have an employer to split this with, so you have to pay the full freight, right? So, but most people, they don't own their own business. They work for somebody. In that case, the employer picks up half. So the employer gets 6.2% and you pay 6.2%. It's deducted from your wages. Now, an important thing to note is that when we think about the non-Medicare part, this Social Security part here, the old, the retiree benefits and so forth, that 6.2% is actually comes out. There's what's called a wage base, right? And the wage base, as of, I believe it was 2015. Let me just myself a little more space. As of 2015, that wage base was $118,500. Now this changes every year, right? So in the United States, excuse me, in 2015, $118,500. And so what that means is, for the first $118,500 you make at your job, you're going to incur Social Security, the 6.2%. That tax is going to be withdrawn. But after this $118,500, if you make, for example, $150,000, well, you take the $150,000, subtract the $118,500, and that's the amount that is not subject to Social Security, right? So only the first, and I'll put here, first $118,500 in wages is subject to the Social Security, right? And then it's capped, right? The idea is that any money you make beyond that 118.5 is not going to be subject to that 6.2%. Now, Medicare is different, right? The Medicare portion, there's no limit. So it doesn't matter how much money you make. And actually, as a part of the Affordable Care Act, I'll just kind of write this over here on the side. As part of the Affordable Care Act, now there's going to be an additional 0.9% tax, additional 0.9% if you make over a certain income, which in 2015 we're talking about let's say you're a married couple, you filed joint, over $250,000 in income. So we'll just say here, just to make it real generalizable, we'll just say high income means that you get an additional 0.9% tax of Medicare as part of the Affordable Care Act. So I'll have some more videos where we get more in depth into Medicare and what the funds are for and these different types of things in terms of getting Social Security benefits, and we'll get into that in more detail. I just think it's important that you understand that you have this 6.2% and then the 1.45, so that actually comes out to 7.65%. That, assuming you don't meet that high income threshold, in case it's even more, but that's 7.65%. That's the FICA that's being withdrawn from your check.